We'll talk later now. So we are now starting with the topic partnership firm. We have covered PGBP and now we are starting altogether a new chapter, partnership firm. What happens in this chapter is that now assessee is a firm, that's it. Assessee is a firm and the firm is doing the business. So whenever any person is doing any business, whether that concerned person is an individual, HUF, firm, company, association, whosoever that person is, PGBP provisions are applicable. So it does not matter who are doing the business, whether you as an individual are doing the business, whether you as a Hindu undivided family is doing a business, are doing the business, whether you as a partnership firm are doing the business, whether a company is doing a business. So whosoever is doing any business, that person must be having the knowledge of provisions of the topic profits and gains of business or profession. So when I'm saying that I will discuss with you a new chapter partnership firm, technically I'm not discussing anything new. All the PGBP provisions are as it is applicable in this chapter partnership firm. Conceptually it is not a new chapter, only the assessee has become different because in our semester 3 everything is related to individual or HUF. So almost everything what we have studied, we are studying as far as the assessee with the assumption that assessee is an individual or HUF. But firm is also in our course. But we have not solved any numerical where the assessee is a partnership firm. That is why in our course of semester 3, partnership firm has been assigned as a new chapter so that students practice some questions on solving the numericals when the assessee is a partnership firm. Concepts are as it is same. Salary cannot be there because a firm cannot do a job. Firm is not a human being, so firm cannot do a job. So a firm can never earn salary. But hospitality provisions are as it is same. A firm can also rent the property. PGBP provisions are of course used in case of partnership firm because firm is doing a business. Capital gain also firm can be having. Firm can sell any property. Other sources also firm can be having. Set off and carry forward provisions also firm can be having. Deductions also firm can be having. So technically, when I'm saying that I am starting a new topic partnership firm, I'm not starting anything new. I just want to solve one numerical where you will learn to know how to compute the total income of a partnership firm and how to compute the total tax liability of a partnership firm. Provisions are as it is same which we have covered so far in the topic of Income Tax Act for our semester 3 level. Only two provisions are different which we have not yet covered. First, when I was discussing the topic PGBP section 40 clause A, at that time I have not discussed section 40 clause B. 40 clause B puts some restriction that when a firm cannot pay interest to partners and when a firm cannot pay salary to partners. Otherwise, interest paid to partners by a firm is a valid business expenditure. Remuneration paid or payable, whatever is that, paid or payable, whatever is that, by a firm to the partners is a valid business expenditure. Both these two expenses can be shown on the debit side of P&L account. Interest to partners by a firm, remuneration to partners by a firm. There is no problem. These are allowable expenditures, but these are having some maximum limit because firm and partners technically are not having a separate legal relationship, separate, because whatever a firm earns, the entire profit comes to the partners. Unlike company and shareholders, firm and partner is different. As far as company and shareholder is concerned, company is separate, a shareholder is separate. But firm and partners, these are not having separate legal entity. Partners run as it is the firm. So partners can manipulate if they want any language of any expenditure. Why this maximum restriction has been given, that when a firm cannot pay interest to partners, when a firm cannot pay remuneration to partners, is that why maximum restriction is there, why there is a disallowance? Because if you do not put any disallowance, a firm can say that entire profit which I have earned will be paid as interest to partners. It would have been a possibility if you have not put any such restriction. In case of a company, shareholders cannot manipulate the thing so easily. Whatever interest a company has to pay to the debenture holders, shareholders cannot manipulate that thing. In case of partnership firm, it is possible that if you do not put maximum restriction on how much maximum interest a firm can show on the debit side of P&L account and how much maximum remuneration a firm can show on the debit side of P&L account, if you don't put a maximum restriction, there would have been a situation of tax evasion. So what I will discuss with you in this new chapter partnership firm is nothing new except section 40 clause B and tax rate of partnership firm. Otherwise, all the provisions of Income Tax Act which we have covered so far are as it is same. You have to simply see which section is applicable to any partnership firm or which section is not applicable. Just like deduction under section 80C. 80C is not allowed to a partnership firm, only individuals and HUF can claim 80C. 80D is not allowed to a partnership firm, but 80G is allowed to a partnership firm. 80TTA not allowed to a partnership firm, 80TTB not allowed to a partnership firm, 80U not allowed to a partnership firm. So what I mean to say is that you have to check yourself which section is applicable to a firm assessee when the assessee is a partnership firm. Let us start new topic, partnership firm now. So let me share now my screen so that what I have just spoken, when I start writing it, you can relate it that yes, what I have just mentioned is exactly what I will be writing here now. So I'm starting now a chapter partnership firm. In my book it is chapter number 16, but in different books it might be having different serial number. So the topic is partnership firm. I hope the screen is visible. So the new topic, partnership firm. If I say partnership firm, that means assessee is a partnership firm. In BCom Honors Semester 3, three assessees are there: firm, individual, and HUF. So all the provisions are exactly same: residential status, salary a firm cannot earn, house property, PGBP, capital gain, other sources, set of uh, deductions, etc. So all the provisions are still applicable to a firm assessee. You have to check yourself which section is applicable to a firm and which section is not applicable to a firm. So what new I will discuss? The purpose of discussing this separately is I will tell you, or you will learn now, how to compute total income of a firm. You will learn now how to compute tax liability of a firm. You will learn now section 40 clause B, disallowance for two types of expenditures: interest paid or payable to partners, by a firm, and remuneration, or you can say salary. When I say remuneration paid or payable to partners, it does not mean only basic salary. It can be basic salary, bonus, commission, house rent allowance, etc. by whatever name called. The point is whatever as remuneration has been given by a firm to the partners, by whatever name you say. Remuneration paid or payable to partners by a firm. So when I will discuss these things, what basically we will learn that when a firm is preparing P&L account, how much maximum interest to partners a firm can show, and how much maximum remuneration to partners a firm can show. That is the only learning here as far as point 40 clause B is concerned. That's all which we will discuss in this. And one theory section also I will discuss, that is section 184. That is a theory section. That's it. So this chapter will discuss only these, will only cover these four things precisely: total income of firm, tax liability of firm, because we have not yet computed, what section 40 clause B talks about for a firm, and what section 184 says about a firm. Remaining provisions of Income Tax Act which we have covered are as it is applicable to a firm also, provided those sections are applicable for a partnership firm. And that is why I gave you an example that every deduction might not be available to a firm. A firm can claim 80G donation, but a firm cannot claim 80D. So that you have to learn yourself. And when in the examination such question comes, you must carefully check that which provision is applicable to a firm and which is not applicable. Is the discussion a little bit clear? If yes, please raise your hands. Okay, next point. Now let me share with you first section 184. It's a theoretical section. It tells us that when a firm is assessed. Section 184. Assessment as a firm. This is the theory section. Assessment as a firm, 184. So it means when you will tax a firm as a partnership firm under Income Tax Act. 184 subsection 1. A firm shall be assessed as a firm for the purpose of this act if the partnership is evidenced by an instrument, the share of partners are specified in that instrument. This is the condition. that when you compute the total income of a firm as per the provisions of Income Tax Act? When there is a partnership deed and in that deed share of partners is mentioned. This is subsection 1. Subsection 2, that this partnership deed must be accompanied when you furnish return of income. This is the second theory condition. Now in reality, now when we file the return of income, we don't furnish any document. That is only theory which is written. Nowadays, when you file the return of income online, you are not supposed to attach anything, though it is written that a certified copy of the instrument of partnership deed referred to in subsection 1 shall accompany the return, but in reality you don't accompany anything nowadays. So it's a condition only, but you must be having that deed ready so that if later on department asks you to submit the proof of that deed, you are in a position to submit that. So these are theory conditions only. So when any such deed exists, so every year a firm can be assessed as a partnership firm. But in case there is any change in the constitution of the firm, that is subsection 4, if there is any change in the constitution of the firm, then you must be having revised partnership deed. That's it. That's it. So 184 talks about only theory conditions. So let me write it in my notes so that you can see the simplified language. So 184 is a theoretical condition under Income Tax Act. Whenever any question numerical of partnership firm comes, we assume by default that conditions of section 184 are satisfied. It is our implied assumption, even if examiner doesn't say anything. If you say that 184 is not satisfied, you cannot compute the total income of partnership firm. Then you cannot apply the rules of partnership firm. To tax the income of a partnership firm, it is must that conditions of section 184 are satisfied. So this is what my first provision in partnership firm, section 184. So write it. Wait a second. I think that at 2:30, 12:45, 1:45, or at 2:30, I think those who want to meet, they can meet 2:30, so that if anyone is having any query in internal or e-filing, any student can ask me. I will also explain that what they have to do. So I'm wait a second, I am sending a message on the group at 2:30 today. If you want to meet online, you can come, where we can discuss queries on internal as well as e-filing. Is it fine?
Yes, sir.
Okay. So let us all meet at 2:30 also. Okay. Now let us start.
Uh, for that I have,
Yes, yes.
sir, that the individual shares of the partner are specified in that instrument.
Your voice is not coming.
Am I clear now?
Yeah.
So, sir, it says that individual shares of partners are specified in that instrument, But let's say if it isn't specified, we assume that it's 1:1 or what, like equal ratio. But will it be considered in that way? And post this, also, partnership isn't does not need to be registered. Like it can be an unregistered partnership as well.
Yeah, it can be unregistered, doesn't matter. Income Tax Act is separate than other acts.
All right, sir. And what about this first one? Like, does the share needs to be specified, or can we assume if it's absent that it is equal?
That exactly I cannot tell. If they say that it must be satisfied, then it must be satisfied. I need to check any court case, etc. on this matter or not. But I don't think this is a big matter. So any firm or the department has ever gone to the court on this matter. This is what my assumption is.
All right, sir.
Okay, because there are so many things for which you will not get directly the answer yes or no. Like the question which you are asking is whether that deed must clearly mention the share, and if not mentioned, can we assume 1:1? So I cannot say exactly what is the answer. Act says that share must be determined, and whether these are written or not, for this then debate and discussion can go on. Suppose even if nothing is mentioned, and if department has objected, it is possible that the partnership firm would separately register it then, and department also will not object, because such cases normally doesn't go at the higher level of courts. Point clear?
Yes, sir.
Such problems are basic problems which can be sorted out at every lower level also. So that is why for this you cannot be having any clear cut answer until unless there is a honorable high court or supreme court case on this matter. Shall I proceed?
Yes, sir.
Okay. So now what basically you should note down in section 184. So this is our first topic of partnership firm. Section 184. So you can note down only those relevant points. So let me tell you only those points which are relevant for you in this. Assessment as a firm. When a firm is assessed as a firm under Income Tax Act, what conditions must be satisfied for 184? By default, we assume that 184 conditions are satisfied. First, there is a partnership deed. First condition, there must be a partnership deed. And second condition, shares of partner are specified. In that deed. These are the only two conditions, but some additional notes you must remember. What is that additional note? Certified copy of deed is needed. Along with the return. Now practically this is of having no relevance now, because along with the return you never submit any document now, but it is written in the act and it has been continuing for the past so many years. Along with the return. Second, assessment on the same basis until unless there is any change. Assessment of the firm on the same basis unless there is any change in the constitution of the firm. If you make any change, then you must furnish revised partnership deed. if there is any change, if any change happens in the original deed. That's it. This you can learn for 184. That's it. Now, what is the tax rate of a firm? This is my second topic. Can you tell me a firm's income is taxable at what rate?
Flat 30%.
Flat 30%, but special incomes are still taxed at special rate. 30%, that doesn't mean that special incomes are taxed also at 30%. Special incomes are taxed at special rate. That is why these are special. It does not matter who you are as an assessee. These special incomes are always taxed at special rate. Can you tell me the name of those special incomes?
LTCG under section 112A.
Hmm.
STCG under section 11.
10%. Normal LTCG 112 20%. STCG 111A 15%. Then
Casual income at 30%.
yeah, casual income like lottery, gambling, etc. 115 double B 30%.
Unexplained.
Unexplained. Section BBD, I think BBE 60%. These will continue to be taxed at the same rate. Remaining income of a firm, flat rate 30%. Is there any exemption limit? Just like 2 lakh 50, 3 lakh, 5 lakh in case of HUF or firm? No exemption limit. No exemption limit for a firm. Even if 1000 rupees income, 30% tax. 300. What is the surcharge?
12
Nil.
with 1
Nil.
lakh
Nil if total income
less than
Is up to 1 crore.
1 crore. And 12% flat if total income is more than 1 crore. That's it. Cess flat, always cess at the rate of 4%. This is the tax rate. After this, now I will discuss 40 clause B and then I will move on with one numerical and then we will wind up the topic.
Sir, is there also 1 lakh exemption limit under section 112A for firms?
Yeah, वो exemption limit तो 112A की है ना, उसमें क्या प्रॉब्लम है? तो स्पेशल है.
Okay.
If I'm talking about this exemption limit, I'm talking about that limit which was there in individual 2 lakh 50, 3 lakh or 5 lakh. That there is no such limit in case of firm. If these sections have their separate limit, that will go on. That is why these are special. 40 clause B now. Clause B. How much interest is deductible? As far as interest is concerned, points. Interest at the rate as mentioned in the deed is allowed. Indeed, only that much is allowed. If deed says 6% and if you are giving 7%, then additional 1% will be added back under section 40 clause B. So whatever is the deed interest rate, that is valid. Second, even if deed says more than 12% disallowed, so interest at the rate exceeding 12% per annum, even if mentioned in the deed, is not allowed. If something is not mentioned in the deed, that much interest is always never allowed. And even if deed says something which is beyond 12%, then also that excess, even though mentioned in the deed, will not be allowed. This is the point which we have to learn for the interest, how much is disallowed under 40 clause B. Section 40 clause B doesn't talk about only interest, it talks about remuneration also. First, remuneration to non-working partner is disallowed. Or I can say remuneration to working partners as mentioned in the partnership deed is allowed. Remuneration to non-working partner is never allowed. So first of all, remuneration must be only to a working partner, and that too must be mentioned in the deed. Now just like interest, even if mentioned in the deed exceeding 12% is not allowed, same is the case with the remuneration. Remuneration exceeding the following value, I will tell you which value is that. Remuneration exceeding the following value, even if mentioned in the deed, is not allowed. So how much is that limit? How much is that limit? The limit is on first 3 lakh of the book profit. So there is a new concept which has come, book profit. Everything I'm talking about for partnership firm. So on first 3 lakh of book profit of a firm, on first 3 lakh of book profit, or even if there is no profit, still you have to pay remuneration. You can pay remuneration if you want. Even if a firm is not earning the profit, it doesn't mean that the partners doesn't have any right to get remuneration. How they will run their family? So on first 3 lakh of book profit, or even in case of loss, how much percentage maximum you can pay to the partners? Rupees 1,50,000 per year. Of course, everything is per year and not per partner. Total. This remuneration is total remuneration to partners. It is not to each partner. It is total to all the partners. 1,50,000 or 90% of book profit, whichever is higher. You must be facing some difficulty at this point, so that we will discuss with the help of a numerical. But how much maximum remuneration, even if date says beyond this is not allowed, but how much is valid? First 3 lakh of book profit, or even if the firm is in a loss, flat 1,50,000 per year to all the partners, or 90% book profit, whichever is higher. If the book profits are more than 3 lakh, then on remaining balance, %60 of book profit is allowed. So you can say that whatever profit you are earning, around 60% you can pay as salary to the partners. There is no problem. What is book profit now? Now this is the value this plus this. So I can say total A plus B is the maximum remuneration. It is the maximum remuneration which can be shown on the debit side of P&L account. It is maximum. If in reality firm has paid more than this maximum, then that excess is disallowed under section 40 clause B. This is maximum. So now it has given me a new concept, book profit. What is actually this book profit? What is actually this book profit? Book profit is nothing but PGBP income, that's it, except remuneration. What is book profit? Whenever you compute your income under the head PGBP by applying all the rules of PGBP, section 28, 29, 30, 35, 36, 40A, 40B, 40 capital A, 41, 43B, whatever sections are there, whatever is your final income under the head PGBP, from that income, just before deducting remuneration, is book profit. So how basically, what do I mean by basically book profit? Suppose this is, I will prepare P&L account and I will compute income under the head PGBP. Suppose it is my income under the head PGBP. This is not book profit. Above it, I have to check how much remuneration I can pay to the partners. This is the last item. After this, I will get PGBP income. So whatever is this figure, this is known as book profit. Whatever is this figure. So income under the head PGBP before deducting remuneration to partner is book profit. So you apply all the provisions of PGBP, add back depreciation, deduct capital gain, add back payment excessive reasonable, add back the expenses of 43B, whatever you want to do, you do. Just before you are about to reach income under that PGBP, make sure that remuneration to partners is not yet deducted. All other provisions of PGBP have been applied, and then whatever is this figure, that is known as book profit. So on this book profit, 90%, on remaining balance 60%, total is the maximum remuneration which can be shown. It is the maximum. In reality, if you are paying less, then less is allowed, but it is maximum. There can be having some doubts in your mind, so I want to discuss first numerical and then I will take your doubts. Let us discuss a numerical from my book. I will show you the screen, you can note it down. I will discuss only one numerical and the chapter is complete then. Page 16.7. I will discuss first this numerical and then only I will take your doubts. Because all your doubts will go away the moment I will discuss this numerical with you. Please take the screenshot of this numerical. You can raise your hands if you have taken the screenshot. It is given on page 16.7. If you have taken this screenshot, please raise your hands. Let us start now reading it. Let us start reading it. X and Y are two partners, 2:1. This is the profit sharing ratio of a firm of lawyers, not liars, lawyers. The income and expenditure account of the firm for the year ending 31st March 2021 is as follows. Rent of chamber, debit side, office expense, salary to staff, depreciation. Depreciation, what we need to check in depreciation, that this is as per section 32. Remuneration to partners 2 lakh 1 lakh 60. I will add back this remuneration and I will deduct as per the provisions which I have just studied. Interest on capital to partners at the rate of 18% per annum. I will add back how much? Can you tell me? I will add back how much?
6%.
6% because maximum 12% is allowed. Other expenses, net income. Credit side, receipt from clients. Long-term gain, I will deduct it because it is not my PGBP income, it is my income from other sources. So I will deduct it when the purpose is to compute PGBP, and when the purpose is to compute total income, I will add it back. Other information. Firm fulfills the conditions of section 184. So this is theory condition. Included in other expenses is an amount of 10,000 by way of income tax. So other expenses given above are 3 lakh 70. Out of this, 10,000 is income tax. I will add it back because 10,000 is disallowed under section 40 clause A. Depreciation allowable under section 32 is 78,000, and how much depreciation is actually shown? 80,000. So 2,000 is extra. I will add it back. Salary and interest are paid to partners as per the partnership deed. So one thing is sure that these are as per the deed, but even if within the deed, if as per the deed, still we have some maximum percentage. Now income and expenditure of X and Y are as follows. Interest on company deposits, dividend from foreign companies, long-term capital gain, short-term capital gain, winnings from lottery, contribution towards home loan account of the National Housing Bank. These are the income of partners, not the firm. So let us skip these values of X and Y. For the time being, my purpose is to compute income of the firm first, then I will go to the partners. Find out the total income and tax liability of firm and partners for the assessment year 21-22 on the assumption that X and Y are resident and ordinarily resident in India and both are less than 60 years of age during the previous year 2021. Both the partners have not opted for optional taxation scheme under section 115 BAC. Please raise your hand if the question is clear. Now let us start solving this numerical now. So examiner is saying that compute total income and tax liability of firm. After this question, the chapter will be over. Computation of total income of firm, of a firm, but not a firm. We should use the article the, not a, because this firm is sure. So I should not use a of the firm because I know which firm is that. A firm is a general. Now it is specific. So we should use article A. Computation of total income of the firm for the assessment year. (2021-22). So I'm not learning anything new basically. I will simply apply the provisions which I have learned. Now a firm also do a business. Always a firm of course is doing a business. So technically I will apply PGBP as it is with new provision of section 40 clause B, that's it. So always, now this is P&L account given, it can be cash or accrual basis. If nothing is mentioned, we will assume that these are on accrual basis. Directly P&L account is given. So what is the best way? Rather than preparing new P&L account, why not to take the P&L profit which is given as per that account? Because 80% of this P&L will be true. So why to waste the time? Always, that is why, always, this is the reason that we start the question of PGBP in such a way. Net profit as per P&L account, add expenses disallowed. Now always start from adjustment. Income tax, add back. Another expense of 3,70,000, 10,000 is by way of income tax, which is disallowed. Add back income tax. Section 40A 2, I think 2. Yes. But don't write this in the exam. That is not necessary. You simply add interest, 10,000 rupees. Then depreciation under section 32 is 78, but you have shown 80,000 excess you have shown. So what excess you have shown, add back. Excess depreciation written off. $2,000. Then now nothing is mentioned in the adjustment now as far as firm is concerned. Then debit side P&L account, rent of chamber of course valid, office expense valid, salary to staff valid, depreciation done, remuneration, add back entire remuneration, because remuneration depends upon section 40 clause B where we have to compute some limits. So first you have to add back, remuneration to partners, whatever is the total remuneration, add it back. 2 lakh plus 1 lakh 60. 3 lakh 60. Then interest on capital. Now here in interest, I'm not supposed to add entire amount. If you want to add entire 18%, you can add it, because ultimately you have to deduct 12% then. In remuneration, I have to compute book profit, so I had no option. I have to add it back remuneration always fully. But in interest, why to add fully? Just to save time. Directly what you can do, as far as X is concerned, interest paid is 36,000. So 36 is the value of 18% and multiplied by how much? Can you tell me multiplied by how much?
So 12.
12.
12 is allowed. 6. And similarly for Y, 12 is allowed. Already 18% has been debited. So you want to debit only 12. So you add back 6. So for Y it is 25,200 divided by 18 into 6. So if you do the total, 36 plus 25,200 divided by 18 into 6, it will be 20,400. You can do the total, 20,400. With this, all my debit items are clear or adjusted. Plus 12,000 plus 3 lakh 60, 392,400 plus 10, 402,400 less credit side receipt from client. Of course, it's a business income. Long term gain, it is not income as far as business is concerned. So I will write income not related to PGBP. LTCG 40,000. Can you tell me what is this figure? Can you tell me what is this figure?
Book profit?
Yes, this is book profit because only one item is left to be deducted, and that is what? Remuneration to partners. The moment I deduct remuneration to partners, the same book profit will be converted into income under the head PGBP. So this is known as book profit. When you applied all the provisions of PGBP except what? Remuneration to partners, whatever figure is that, that is known as book profit by default. So working note number 1. So next page I am computing the working note number 1. Logically after 2 pages I should compute working note 1. Calculation of remuneration to partners allowed as deduction. Now what is the rule? If nothing is mentioned, I will assume that these are working partners. If nothing is mentioned, that is by default assumption that these are working partners. So you have to assume it these are working partners. Then on first 3 lakh of the book profit. Now total book profit is 362,400. So on first 3 lakh of the book profit, rupees 1,50,000 or 90% of this book profit. So I have taken first 3 lakhs, so 90% becomes 2,70,000. Whichever is more. So which is more? 270. Then on remaining balance of book profit, how much is remaining balance? Out of 3 lakh, 62,400. 3 lakh has been taken care of above. So it is 62,400. 60%, 37,440. At the rate of 60% is 37,440. So what is the total as per book profit rule? 37,440 plus 2,70,000. 307,440. And how much you have already deducted in P&L account? 360, but I added back here. So maximum is, this is maximum. Maximum is what? 307,440. That means I cannot deduct 360. As per deed, I have to deduct 307,440. At this value came out to be 8 lakh because of some reason. If this value came out to be 8 lakh, then I would not have deducted 8 lakh because this is maximum. In reality, then my actual was 360. I would have deducted rather than 6 lakh, 3 lakh 60. But always compare always compare your remuneration as per deed with remuneration as per book profit concept, and whichever is lower is allowed as deduction, because this book profit concept has used the word maximum. So whichever is lower is allowed as deduction. So I will deduct 3,07,440. This is the maximum which income tax department assumes it as valid remuneration. So I'm left with what? Final PGBP. I means partnership firm. 362,400 minus 307,440. 54,960. Now, is there any other income of firm given? Salary firm cannot be having. House property firm is not having. We have income from LTCG. LTCG, how much? 40,000. No other sources given. So the gross total income becomes 54,960 plus 40, 94,960. Less. Is there any deduction under section 80C to 80U, but now I will not use the word 80C to 80U. Do you remember the deduction are contained in which chapter of the Income Tax Act? Do you remember the chapter number? It is chapter 6A. I should write it. Or I should write deduction under section 80. Don't write 80C to 80U because a firm cannot claim 80C as well as 80U. So write either deduction under chapter 6A or section 60 if you want to write. Okay, under either this or this. So how much is 80, chapter 6A? Is it given? No. A firm has not invested in the eligible funds or whatever, 94,960 is total income. This is what I wanted to teach you today, that this is my total income of firm. Now if it is the total income of firm, then let us compute tax liability. Computation of tax payable by a firm for the assessment year 21-22. Now, is there any special income of firm given? There is no LTCG. No, there is an LTCG. Sorry, there is a long-term capital gain of 40,000, but there is no LTCG of section 112A. There is no STCG 111A. There is no gambling income, or there is no unexplained income. Only LTCG. That is taxed at its own rate. So tax on total income of 94,960 is the total income. How will we tax it? Tax on LTCG 40,000. Can you multiply it by rate? Can you tell me the rate also?
20%.
Which rate?
20%.
Yes, 20%. 8,000. Tax on remaining income of firm. After 94,960, if you remove from this 94,960, if you remove 40,000, then you are left with 54,960, and this is having flat rate 30%. $16,488. $24,488. Now, firms do not get any rebate under section 87A. There is no rebate of 87A for a firm. And then health and education cess at the rate of 4%. Surcharge is also nil because the income does not exceed 1 crore. 24,488 into 4%. 980. $25,470 is the answer. So half question is complete. Partners are still left. This is what tax payable. Rounded of 25,470. Yes, this is tax payable, but the story doesn't end here. Can you tell me what will happen after this tax with the firm? What will happen? Can you think what will happen after this tax? Can you tell me what will happen after this tax? Now this profit will be gone into whose hands? Partners. So you have to write one line after this: profit after tax will be distributed there are how many partners? Two partners. Will be distributed between the partners, will be distributed to partners in their profit sharing ratio. So the profit after tax will be distributed to the partners. My income was 94 something and the tax is this. So difference will be distributed to the partners in their profit sharing ratio. Their profit sharing ratio given is 2:1. With this 50% question is over. The firm's calculation as well as tax is clear. Please raise your hand if this point is 100% clear in your mind. Now I will solve the income as well as tax of partners. Please raise your hand if the point is clear. Okay. Next point. Now let us wind up the income of partners in the same question. Such questions always ask you, normally ask you to compute the tax of firm as well as partners. So now another format, same question is going on. Computation of total income and tax liability of partners. For the assessment year 2021-22. Now this requires so many concepts, you will carefully realize it that this requires so many concepts to be applied. The partners are only two partners are there. So this column is not required. So the partners X and Y. X and Y. Now start it. First of all, is there any, go by headwise, is there any salary income of partners given? No. Is there any house property of partners given? No. Is there any PGBP income of partners given? Can you tell me, is there any PGBP income of partners given? Yes. If you remember section 28, clause 5, clause 5, I think. Any salary, any interest, whatever is received by a partner from a firm is partner's PGBP income always. It is not treated as income from other sources or income from salary. Don't get confused with the word remuneration. This remuneration is not salary, because to be taxed under the head salary for remuneration, employer-employee relationship is must. Between partner and partnership firm, there is no employer-employee relationship. So whatever a firm gives to the partner, whether that is interest or remuneration, that is taxed as partner's PGBP income. So what is interest? Can you tell me how much interest is taxable? Now 6% already we have disallowed. Only that is known as income which has been allowed as expenditure in the hands of other party. In reality, I am getting 18%, but when it was the tax department's point of view, from that point of view, 6% was already added back in the hands of the firm. So now department has no right to ask from me interest income at the rate of 18%. Whatever they have allowed as deduction to one assessee, the same amount will be allowed to me, will be taxed in my hands. That's it. So interest is maximum at 12%. 36,000 is the interest of 18%. We divided by 18 and multiplied by 12 because 6% has been disallowed. So now it is not correct on the part of tax department to collect the tax from the partner at the rate of 18% interest. Divided by 18 multiplied by 12, 24,000. And then y, 25,200 divided by 18 into 12. 16,800. This is PGBP. They are also getting remuneration. Whatever has been allowed, that is only taxed in the hands of partners. So how much remuneration is allowed? Not 3,60,000. The remuneration allowed is 307,440. So it should be taxed in the hands of partners. But can you tell me how do you divide 307,440? Can you tell me how will you divide this 307,440?
So in the profit sharing ratio?
No, no,
In the ratio which the earlier remuneration was divided.
yes. So that point is must for you not to forget. The point is remuneration to be taxed in the hands of partners is to be divided between the partners in the ratio of remuneration of partnership deed. So if earlier or in the deed the remuneration given is 2 lakh is to 1 lakh 60, so 20 is to 16, the ratio becomes 20 is to 16, or to be more precisely 20 is to 16 becomes 5 is to 4. So you have to divide the remuneration, whatever is allowed as deduction, the same amount will be taxable, but that will be divided in the ratio of 5 is to 4. Don't forget to skip this point. So 3 lakh 7,000, sorry 3 lakh, yeah 3 lakh 7,450, 440, 307,440 to be divided in the ratio of 5 is to 4. But in the examination don't write in this way, okay? This is only for the class work. You have to write complete thing that 3 lakh 7,440 is will be divided in the ratio of 5 is to 4. So don't use short form. It becomes 17080 800, 170,800 for X and 136,640 for Y. One more income is there. Can you tell me what one more income is there of PGBP?
Profits?
Yes. That is also my PGB income as a partner share of profit. Though that will be what? Can you tell me that will be what? Exempt. This is the new point. Why logically it is exempt?
Because it's already been taxed earlier in the
Yes,
hands of the
because
firm.
firm has already paid the tax. Partners are only getting the remittance of that profit. So you must remember that share of profit received by partners from a partnership firm is exempt from tax under section 10 clause 2a is exempt from tax. Under section 10 clause 2a, share of profit received by partners from a firm is exempt from tax under section 10 2a. Just to avoid double taxation situation, it has been exempt. So one head is over, PGBP. Total is 194,800. 153,440. Now after PGBP, which head starts? Capital gain. Is there any capital gain of these partners? Yes. Long term gain 80 and short term gain 3. So now this is capital gains. Long term gain 80,000. Short term gain 3,000. And in the same question, long term gain is 20,000 for Y, but 6,000 for X. Sorry, 6,000 as short term loss. Will we write 6,000 here? This is my question. Will we write 6,000 here? Any answer? Can we write 6,000 here? Yes. Now I'm applying the rules of set off and carry forward. Short term capital loss can be adjusted against. Do you remember?
In the same head.
Yeah, in the same head. That means against LTCG or STCG, it is my choice. I can first claim it towards any of these two, whether long term or short term. So it depends on my tax planning what I want to do. So that is why I'm writing it here, because I know that it will be adjusted against above long term gain. So this is my note 4. Share of profit was my note 3. Don't forget to write note numbers. And then remaining were, this was note 2. And then note 1 is given on the previous page. Is this point clear? If yes, please raise your hand. Next point. Now we have income from other sources. So in the same question, I have applied the provisions of set off and carry forward also. This is how you get full-fledged question in the examination where anything can be applied. Income from other sources. How much is income from other sources given? Interest on company deposit. Interest. 74,5,800. Dividend from foreign companies. Even if dividend is from Indian companies, still it is taxable. With effect from assessment year 21-22, dividend is not exempt in the hands of shareholders. It is tax. Dividend is taxable in the hands of shareholders. Dividend from foreign company or Indian company, it doesn't matter. Add it. 7,000, 11,000. Long term gain is over, short term gain is over. Winning from lottery, casual income is there. How much? Gross. Can you tell me the meaning of gross? Can you tell me the meaning of gross?
No adjustments have been made for cost, like tax and other deductions.
Only TDS. Because in case of casual income, you never deduct any expenditure. If you remember other sources, we have not yet covered other sources, but I think I have told you one provision. In case of casual income, you cannot deduct even their own expenses. The incomes are flat taxable. So in case of casual incomes, their own expenditure is not allowed. Only income is taxable. Their own expenditure is not permitted. Is not allowed to be deducted. Only the income is taxable. That is why whenever in casual the word gross is written, you assume that it is without TDS. Otherwise, in casual income also there is a TDS of 30%. But whenever in casual income the word gross is written, make sure to assume that there is no TDS. So whatever is my earning, I received it. In reality, you don't receive it in such a way. In reality, you get the amount after deduction of this tax. But coincidentally, in my question, assessee received the full and final amount, and that is without tax, 4,000 and 10,000. That's it. This is what gross total income of the assessee. Gross total income of the assessee. 194,800 plus 80,000 plus 3,000 plus 74,000 plus 11,000. 362,800. And for this person 153,440 plus 14,000 plus 5,800 plus 21,000. 239,220. Yes. After this deduction, can you tell me which deductions are available? Any answer? 80C. Contribution towards home loan account of National Housing Bank 40,000 and 60,000. This is what my 80C. Total income. On this I will pay the tax now. It is 320,800, 322,800, and it is 179,400. Till this point, if you have any problem, you please ask me. Otherwise, raise your hands. Till this point, there is no problem. Please raise your hands.
Sir, one question. So let's suppose that STCG loss under STCG, which is STCL, is higher than LTCG. So what can be done? What maximum loss shall be harvested? That case.
Only that much of STCL which you can adjust against LTCG. Remaining will be carry forward.
For example, over here my STCL is 22,000, so 2,000 will be carried forward to the next assessment year, right?
Yes. Yes.
Okay.
Yes. Okay. Now the question is not yet over, and now we have to compute the tax of partners. So computation of tax liability of partners. So I am continuing the same column. Now let us compute the tax. So I have to compute the tax on rupees 322,800 in case of X and rupees 179,240. Can you tell me how will I compute now tax? So let us first talk about X. How do you compute tax on rupees 322,800? Any answer? How will we proceed while computing tax on 322,800? And do remember that these are resident and senior citizens, resident and non-senior citizens less than 60 years, and these are ROR, and they have not opted for optional taxation scheme. Can you tell me how will I proceed? 322,800 is the income of X. How will I proceed?
Tax on special income.
Special income.
Yes, always we should proceed in this way. Very good. Out of this, special income is how much? How much is special income?
So 4,000.
Yes, first of all, tax on LTCG. Sorry, tax on lottery. $4,000 into 30, and similarly 10,000 into 30. So 3,000 it will become for Y, and 1,200 it will become for X. After this, what will happen?
So we'll see LTCG. But before that, we'll see that if the total income without LTCG is less than the exemption limit or not.
Yes. But why you are saying this? On what basis you have said this point?
So in case the income without LTCG is less than exemption limit, the amount that is still left up to the exemption limit can be deducted under LTCG for the purpose of calculation of tax.
So the heading is relief in case of resident individual as far as X is concerned. I don't know whether you remember or not, there were two conditions. What are those two conditions? First, he must be a resident. This individual must be resident. And second, his total income excluding LTCG is less than his exemption limit. Presentation I'm not showing here because in the capital gain we have completely discussed this point in detail. For the presentation you can see from there. So as far as X is concerned, how much is the total income excluding LTCG? 322,800 minus 80,000. 322,800. Writing part you can see from the capital gain. There I have written in that capital gain complete line, but now I'm solving it. 322,800 minus LTCG of 80,000. So this value is how much? 242,800. Is it less than his exemption limit? Yes, because his exemption limit is 2,50,000. He is less than 60 years of age and resident. So by how much it is less? So always see this difference. How much? By how much it is less? 7,200. This is the difference. So what can be done? You can shift 7,200 from LTCG to remaining income, like 322,800. So I can say that if from 80,000 I deduct 7,200 and I add this 7,200 in remaining income, the remaining income is 322,800 minus 80,000, 242,800. You add it there in 242,800. It will still be 2,50,000, which is within the exemption limit, but it will come 7,200. So I will charge now LTCG tax. I will charge now LTCG of only 7,200 at 20%. This is the point. That now when I say that I will write tax on LTCG, I will write it as 7,200. Sorry, 72,800 into 40%.
So 20%.
Sorry, 20%. Yes, 20%.
Sir, I had a doubt. So we had like casual income that has already been taxed, so we weren't able to claim any sort of exemption limit there. Will we not reduce that 4,000 from total
No,
income excluding LTCG?
no, there is no such relief available in the Income Tax Act. Income Tax Act gives such relief only from LTCG and STCG under Section 111A.
All right, sir.
Okay. So how much is tax on remaining income now? Nil, because when you have given this really by default, your remaining income is only 2,50,000, or in fact not 250. You can say the total is 322,800 minus 4,000 has been taxed, minus 72,800 has been taxed. Remaining is 2,46,000. So how much is the income? 2,46,000. This is the remaining income now on which tax is nil. So this becomes 1,200 plus 14,560. 15,760 less from 15,760 what to deduct? This is tax less rebate under 87A. Yes, will you get it? Yes. Because my total income does not exceed 5 lakh. If it is not exceeding 5 lakh, then rebate is 100% of tax or 12,500, whichever is less. So 100% of 15,760 or 12,500, whichever is less. 12,500 is less. Deduct it. 3,260. Add surcharge nil because income does not exceed 50 lakh. So I'll be having only health and education cess at the rate of 4%. 130. This is what my tax payable is, and that too after rounded off. 3,390. There is no need to round it off. It is already rounded off, so you can skip this point. No, I think I had to round it off. Just wait a second. 3,260 into 4%. Yes, I have rounded off 3,390. 3,390 is the correct answer. Yes. In case of Y, now let us come to the case of Y. Y's income is 179,240. 179,240. But special incomes are always taxed at special rate. So is there any casual income given? Yes, 10,000. So in case of Y, so this 10,000 is taxed at 30%. So 3,000. Then LTCG, how much LTCG is there? In this case also, I will go by relief. So I will go by relief. This was the case of X. In the examination, don't do like this. Okay, make fair presentation. Now in case of Y, what happens? In case of Y, what happens? Total income excluding exemption limit. Total income excluding, not exemption limit, LTCG. Is it less than exemption limit? Answer is yes. So how much is total income excluding LTCG? Total income is 179,240 minus how much? Can you tell me minus how much?
So minus 14,000.
14,000. Because already 6,000 has been set off. And tax comes after set off. So tax comes after total income. So set off must have been applied first. Then you think about tax. So do remember these points. So those students who only learn the things, they always get confused in such things. Just apply the concept and think logically what will come. So this is 165 to 40. Is it less than the exemption limit of 250? Yes. By how much it is less? 250 minus this, it is 84,760. So what I can do? I have 14,000 LTCG only, and I have the scope to shift 84,760. but I have only 14, so I can shift entire this LTCG. And what is my remaining income? That was
Nil.
165 to 40. In this I can add this 14. It becomes 179, 240, and it is still less than the exemption limit. So technically there is no tax on this amount. But my LTCG now it has become nil. So with this I can say that on LTCG there is no LTCG now, and whatever is LTCG is given as relief. So I will write nil. Remaining income. Can you tell me how much is remaining income? How much was remaining income? This was of X. How much is the Y's remaining income? 179,240 minus 10,000. So the remaining income is 169,240, on which tax is nil because it is less than exemption limit. 3,000. How much is rebate? 12,500 or 100% of tax, whichever is less. 3,000. Nil, nil, and nil. That's it. In the book, you please make one correction. Those who are having my book, I have written this rebate amount as 2,500. So maybe there is some printing mistake. This rebate is not 2,500. It is 12,500 in case of X and 3,000 in case of Y. So the final answer is 33904 for X and nil for Y. It is a lengthy question. The question of partnership firms are lengthy. Questions of partnership firm are lengthy because first you will compute the income of firm, then tax of firm, income of partners, then tax of partners. Coincidentally, here while computing tax, I had to apply relief concept also from LTCG. That is why it became a little bit lengthy. But the moment you start practicing the questions of firm, you will find these very easy. So with this, we have completed the topic of partnership firm. If you have my book, then there are many questions given uh, around 13 questions are given and similar number of exercise also. If you have other book, then please practice these questions from that other book, whatever you have. With this, the topic partnership firm is over, and that's all for today. So let us wind up the topic. Thanks. So we are ending this session now. Partnership firm is over. Now you have to practice the partnership firm. Goodbye finally.